All right. Well, my name is Casey, and I work for United Way of King County in our VITA program, which is volunteer income tax assistance. We prepare taxes for the community. I'm going to do a little basics on income taxes for you. So, yeah, let's just dive right into it. Miriam's on the call too, and she's going to ask me some questions as we go. So hopefully that'll help kind of break it up from me just talking at you. So I'm just going to talk through how taxes work, filing requirements, tax credits, and tax resources. So what does it mean to file our taxes? You probably already know, but I'll just talk about it a bit anyway. So each person working in the US has some sort of tax liability, which is the tax amount each individual is responsible for paying to the government. So the only thing that happens when you're filing a tax return is you're determining, okay, did you overpay your taxes for the year or did you underpay them? And the IRS looks at that information and they also look at if you're owed any tax credits. They calculate your liability and then they either issue you a bill if you owe something or they give you a refund if you uh, overpaid or if you're due any tax credits. So specifically, what we're going to talk about right now is how the wage boost pilot that you're participating in might affect your taxes. Um, so the important thing to note is that the money that you're being paid from the wage boost is going to be paid out pre-tax. So that means you need to account for whatever taxes are being taken out of it. It will not be automatically done. So if you already have a W-2 job, then that'll still be paid out to you normally, but that additional income is going to need to be accounted for. The goal is that you're going to want to make any estimated tax payments to the IRS before you file to avoid any potential late fees or a surprise tax bill, because nothing sucks more than filing and getting a bill. So there are a couple ways you can do this. The first way is probably the easiest way, which is if you're already employed at a W-2 job, then you can just amend your W-4. You're legally entitled to be able to update your W-4 form at any time with your employer, and you can print out this form yourself, or you can ask for a new one, or if you have not all employment software, but many do, like ADP. If you have ADP, you can log in and just change your tax information right there from your employee portal. Um, but either way, all of that is trying to just update your W-4. So what you're going to do is you're going to look at how much you're making from the pilot, and you're going to enter that information into box 4A on the W-4. Um, and if it's not a W-4, if it's just like an online portal thing on ADP, then there should be an option to just like adjust your withholding to indicate other income from a different job. So in this case, it seems like we're dealing with two different kinds of payments here, which is full-time, which is receiving $2,080 per quarter, or part-time, which is receiving $1,040 per quarter. All you're going to do is take the total number of money that you're going to make for the year, and you're going to pop it in box 4A, and the IRS will adjust your withholding accordingly. So now you don't have to do anything because you'll be paid out less from your W-2 job, but that's because they're sending the extra withholding to the IRS. And hopefully that'll just take care of it. You won't have to worry about it. And come tax day, you won't owe anything. And hopefully you'll get a refund. Second way is you can pay the IRS directly. So there might be a couple reasons you want to do this. One is, well, you just don't have a W-2 job for you to piggyback on. You're already self-employed. Or two, you don't want to do it that way for whatever reason. That's fine. So at that point, your job is to pay the IRS directly. Um, So if you're self-employed, you should already be paying your taxes quarterly. If you're not, then you should be. Um, I have the next slide's going to talk about the due dates, but you can fold in the extra payments in with whatever you're already paying. So just calculate out what that quarterly amount should be and just add it on to your quarterly payment that you're already making to the IRS. Or if you've never done that before, then I'll talk about how do you make those quarterly payments to the IRS. My advice is don't wait until you file to pay your tax liability. It often results in late fees, or if you owed over $1,000, you could also get a penalty for owing over $1,000 on tax day. So it's good not to wait. All right, so let's talk about figuring out tax liability. So as we said before, you're talking about $2,080 per quarter. You're full-time, $1,040 per quarter if you're part-time. You're just going to take that and multiply it by 15.3%, and that's going to give you how much your quarterly payment should be. It's good to note that if you're part-time, you're not really technically required to prepay taxes to the IRS, as it'll be below $1,000 in taxes owed at the end of the year. But you're kind of running a risk there because if you have any other income that's pre-tax, it might push you over that $1,000. And again, it might just not feel great to file and know that and suddenly be seeing like, oh, I owe like over $600. So you may as well prepay if you can. Um, so how do you do that? Oh, that's on the next slide. The other way to do it is to use the IRS tax withholding estimator tool. So if you have a more complicated income situation, say you have like other streams of self-employment income, you have children that might be affecting your tax credits, um, you know, certain things that might be affecting your tax situation, you can also use the IRS tax withholding estimator tool. So instead of just multiplying by a straight 15.3%, which is kind of the safe self-employment rate, you can just use the estimator tool, which is on the IRS's website. This is the link. It's just if you look up tax withholding estimator, it'll come up for you, and then you just click the button that says use the tax withholding estimator, and then you can plug in all of your information, and it'll tell you about what you should be paying per quarter. So when are they due? These are the 4 due dates. So anything made between January 1st and March 31st, you're going to want to pay by April 15th. Anything made between April 1st and May 31st, pay by June 15th. June 1st, August 31st, September 15th, September 1st to December 31st is January 15th of the following year, unless you plan to file prior to January 31st. Most people don't file that early, so maybe just plan to make that estimated tax payment on the 15th, and then you'll be good to go. And just a note, it's the nearest business day to that date. So if this is going to fall on a weekend or a legal holiday, then it's going to be the next business day. So don't got to pay on weekends. So how do you pay them directly? Super simple. You go onto irs.gov/payments, and then you can pay with your bank, you can pay with a card, you can pay in your online account. You're going to want to create an irs.gov account to do this. And once you're logged into your profile, you can just make your payment direct from there. It's pretty simple. Just a good thing to note, the IRS is not going to send you any records of how much taxes you paid. You're going to have to keep track of it yourself. So just keep like a little ledger and just write a note to yourself. I paid the IRS $340 on April 10th, and I paid them again on June something. So just keep track. And that way, when it comes time to file, you'll know what you already paid them, because either you're going to see a tax preparer or you're going to prepare your own return. But either way, there's going to be a section where it'll ask about estimated tax payments that you've already made. That's where you want to enter it in, because the IRS, they'll consolidate it eventually. But what you don't want to have happen is to file without a record of what you already paid them and then be shown that you have a tax bill, and then you have to like contact the IRS and explain to them you've already paid and stuff. It's better to just have it all taken care of when you file. Um, so when it comes to filing, these are the forms you're going to see, right? You're going to get your W-2, you're going to get a 1099. That's what you'll get in the mail. Highlighted in red are the sections that talk about taxes being taken out. So like we were saying, or I was saying before, if you decided to amend your W-4 and have the extra taxes for the wage boost pilot taken out of your W-2, it'll be right here. You'll see that reflected in these numbers because it'll be higher than your last year's of taxes. If you're not doing it through W-2, then you're going to be issued this 1099 form. It's probably going to be an NEC form. It could be a MIS or it could be a K, but it'll be some kind of a 1099 form. This will be blank. It's always going to be blank. Even if you're prepaying the IRS yourself, this box 4 will always be blank. So the information when you file that's going to be relevant is basically just going to be the payer's tax identification number, their name and address, and then what they paid you. And you are going to have to supply what you paid in taxes separately. And if you have a W-2 and a 1099, then it's the same thing and you don't need to worry about it because you already paid through your W-2. So what happens when you file? Like I said before, you're just telling the IRS your total household income, the size of your family, your age, the ages of your children. If you or your children are college students, the IRS is going to determine if you're eligible for any tax credits and they're going to calculate your tax liability. If you paid too much, you're getting that refund. If you paid too little, you'll owe taxes. That's all a tax return is. Uh, it's really kind of that simple. It's not, sometimes I think people can get a little confused about where money is coming from and what money is, but at the end of the day, it's just um, figuring out what you owed and if you overpaid or you underpaid. That's it. So, how might the wage boost pilot affect your tax credits? So let's take a closer look at a couple of them. The bigger one that you'll probably be thinking about besides child tax credit is going to be earned income credit. So the thing to know about the earned income credit is that it's not flat. And I know this is from 2022, but we don't have a current there hasn't been like a current graph release for the past couple of years, but it's very similar, just higher numbers. But the point is that it's a phase in and a phase out. So as you can see, if you're single and you don't have any children, it's a really shallow curve. I think right now the curve is like at $12,000 is about where you hit the sweet spot for maximized DIC, but it's like barely over $500. I think it's like close to like $600, $700 for a single person. So really, you're not likely to see this. But what you're probably going to see is if you have a kid or two kids or three kids, that's where you're going to start to see earned income credit. So I guess the salient point is that the wage boost pilot, even at the full time, is not going to push your income that much forward. And even if it does, if you were inside the earned income credit bracket, you're likely still going to receive some of it. Because there's a pretty long phase out for it. So I wouldn't necessarily let earned income credit be the thing that stops you from wanting to take the wage boost pilot because you're still very likely to receive some. The working family tax credit is similar, although they don't really have much of a phase in. So as long as you have earned income at all, then you'll get some. But it has a very similar phase out, which is it'll just start phasing out as you get to the higher income points, but you're still going to receive some. Child tax credit is really not affected by income unless you start talking really, really high incomes. Like I think it's over $250,000 is when it starts to phase out. There is a phase in. It seems to start around $11,000 in income. But the main determiner on if you're going to get it is whether or not your child is younger than 17. So that's really the only thing to think about is like, how old is my child? Other than that, the wage boost pilot isn't going to affect it. And same thing for credit for other dependents. This is going to kick in if your child is older than 17 or if they're a different type of dependent, such as an elderly parent, disabled roommate, disabled spouse. And this is just a $500 credit. Uh, and this is kind of a side note, but another thing to know about, since some of you may be educators on this call, there's a thing called an educator expense you can take. If you weren't already aware of it, it's a deduction. And you're able to take this deduction even if you take the standard deduction, which is nice. But this is up to $300 in expenses for materials used in the classroom. So who's eligible for it? K through 12 teachers, instructors, counselors, principal, or an aide who worked in the school for at least 900 hours during the school year. And the kind of expenses we're talking about are like books, supplies, equipment, art supplies, computer equipment, software, I don't know, pencils, paper, scissors, crayons, all that kind of stuff. That's qualifying expenses. So are personal protective equipment like masks and disinfectant, and then professional development expenses, unless the school reimburses you, because if you've been reimbursed, then you can't deduct it. You can't deduct expenses for homeschooling or non-athletic supplies for courses in health or physical education. So yeah, basically what's going to happen after all that, we're looking at page 2 of a 1040, which is a tax return. And this is all that happens, right? Is we're seeing, okay, you owed this much in taxes. You had some child tax credit that's offsetting it. You had some earned income that's offsetting it. You have some withholding that you paid. And all of this is going to be added together, and we're going to figure out, oh, you've got a $2,900 refund. Or, okay, we owed $5,000 in taxes. We only paid $4,640 in taxes. There's a discrepancy. Okay, that's your tax bill. So that's how you read a 1040 page 2, and that's how you can figure out what you owed or if you owed, and that's all there is to it. So how do tax brackets work? Because that might be another thing you're thinking about in terms of taking on a wage boost. So these are the tax rates, right? And they're attached to these buckets of income. But the important thing to note is that the tax rate is progressive. It's not like a flat thing. So just because you're making, say, $50,000 a year, that doesn't mean all of your income is being taxed at 22%. It means everything in this bracket up to $10,275 is being taxed 10%, 12% between that number and $41,000. Above that, 22%. So that's basically meaning that it's being broken out like this. So if the wage boost pilot, say, pushes you out of the 12% income bracket, then that only means that whatever couple of $1,000s that are pushing you over the 41,000, then that'll be taxed at the 22%. But under that, it's going to be taxed at the 12%. So that's just an important thing to think about, is like it pushing you into higher tax bracket is really not going to be that consequential. So I'll stop now. Miriam, you got any questions for me?
Yes, thank you. The first part of your presentation is very informative, and I feel like you've answered most of the common questions. Just to reiterate, the wage boost will
Hmm.
show up on a W-2 or a 1099.
So the wage boost is going to be sent as a 1099 from, I think, a company called, I wrote it down, it's called Aid Kit. So it's likely going to look like this, and it'll just say Aid Kit right there and their address and their state.
Okay, thank you.
Hmm.
So,
Any other questions?
yes, as a home-based provider, and I'm considered a self-employed person, these payments I am responsible for,
Hmm.
correct?
Yeah. Yeah. So if you're self-employed, like I said, you should already be making quarterly payments to the IRS. If you're not, you should consider starting to make them. Um, and then you can just add them to your quarterly payments that you're already making. If you're not already making quarterly payments, then you can start making quarterly payments. And again, you can just pay all of it at the end of the year when you file, but you're just starting to run into the risk that you might owe late fees or an additional fee if you owe over $1,000. So it's okay for you to file later, but it's kind of in your best interest to not wait.
Great, thank you. That was another question. What happens if we don't pay the taxes before we file? So it's okay
Yeah.
to.
Yeah, so what all that's going to happen is the IRS is going to look at all of your income, so your entire income situation. They're going to calculate your tax liability and then they're going to tell you what it is. And if you owed over $1,000, then there will be a penalty. I don't remember off the top of my head what the penalty is, but there'll be a penalty. So it's best to not incur a penalty, like, because like why pay more when you don't have to?
Mm-hmm. Okay. Is there any common mistakes that you have experienced in regards to childcare workers or in-home providers that they make when they file something like this, when it's just a wage boost or a supplemental income?
Um, I'd say the biggest mistake I see is just most people don't prepay their taxes. The second would be people aren't tracking their other expenses if they're self-employed. So, not everybody has expenses, right? But, presumably if you're an in-home care worker, there are probably some expenses that you're incurring that you should be keeping track of. Um, like, okay, you may not be eligible for an educator expense, but say you buy paper and craft supplies, you buy pencils, you buy erasers, you buy a whiteboard, you've bought like enrichment activities for kids. Like all of those are things that you can expense as a part of your business.
Mm-hmm.
Um, because self-employed people owe slightly more in taxes. These two types of taxes right here, Social Security and Medicare. Um, when you're employed as a W-2 employee, your employer is going to pay half of your Social Security and Medicare taxes. You'll
Mm-hmm.
still owe the same amount of federal taxes regardless of if you're self-employed. But if you're self-employed, you owe twice as much Social Security and Medicare tax. And one of the things that you can do that you can't do if you're a W-2 person is you can have expenses. So, I would say the biggest mistake I see is people just not tracking their expenses. They come in to get their taxes done and they don't really have a clear picture on what they've spent money on this year. And so they might be leaving some money on the table unnecessarily. So it's good to just check your expenses. And I mean, hey, if you're not sure if it's if it's an expense that you can write off or not, hey, just write it down and bring it to your tax person and they can give you their opinion. Like it's okay if you don't know, but it's good if you at least have a picture of what you spent money on. And that way a tax person can help you when it comes time to file.
Perfect. Thank you, Casey.
Mhm. Any other questions?
Nope, that was it.
Cool. Let's get all the way back. Doo-doo. So I'm sure most people on this call are already aware of their filing requirements, but I figure I'll just go over them really briefly anyway. So there are three major things that are going to affect your filing requirement, which is how much you earned, how old are you, and how big is your household? Uh, More importantly, like, are you taking care of anybody? So you're probably already aware, but just to go over it again, if you're single, you're not married, you don't have dependents. If you're filing jointly, then you're married and you have dependents or you don't. If you're filing separately, you're married with or without dependents. If you're head of household, it means you're not married and you have dependents. If you want to do qualifying widower, then you can do that for the first year, you can do it. And then after that, it has to be with children. I think it's for 2 years. quick note, I see some mistakes on a couple of things. So head of household, that's like you're single and you have kids, or you're mailing filing separately, but you're like separated from your spouse and you have the kids, then you can claim head of household. That's it. It's not like, oh, I'm head of my household, or like, oh, like I live with my roommate, but I pay more money, so like I'm head of household. That's not what that means. It just means you have a dependent and you're either single, like you're unmarried, or you are married, but you're filing separately from your spouse and you're claiming the kid. Um, filing separately is the status we see the most mistakes on, particularly if you are separated from your spouse, maybe not, but not legally separated. You are still stuck filing married filing separately, even if you're no contact with your ex-spouse. Uh, you can do head of household if you're claiming a kid, but other than that, you still have to file it married filing separately, even if you are no contact, until you are legally separated and have a divorce. So that's something I see fairly often is people making mistakes on the married filing separately status. So I just want to bring it up. So what are the income and filing requirements? This is a big table with a lot of numbers on it. So I'll just pause for a second so you can look at it. But the salient point is that if you make basically over $14,600, if you're single, you should file. If you're married, it's going to be $29,200 for both spouses. Marrying filing separately though is like $5. So basically, if you make anything and you're married filing separately, you need to file. The only thing where this is different is if you're self-employed or if you have unearned income, and unearned means like interest income, then that's like you have to file if it's over $400. And this number never changes. It's always $400. These numbers here go up every year. So you may ask, why would I file if I'm below the filing requirement? There's a bunch of reasons people might do it. Um, Most common reason is to get a tax refund. Maybe you paid some withholding over the course of the year through your W-2, or some people have withholding on their Social Security or on their retirement. You just want a refund on it. So that's a really good reason to file if you're below the filing requirement. If you see a number in your tax withholding, that means you paid some taxes, you can get them back. Another reason people file is to claim tax credits that they may be eligible for. Another reason might be for their free application for federal student aid, which is the FAFSA. Some people file with a zero to get it, but it's better if you file with just like your actual numbers. Some people do it to show compliance to tax laws and to file for citizenship. And I've heard that a tax return can sometimes help qualify you for social services, but I don't know how true this is. It's just something I've been told by the IRS. Any questions about that section?
No questions.
Cool. All right, let's just talk about some free resources. So you can come see us, United Way of King County. We offer free in-person tax preparation as well as virtual tax preparation. We've got 20 sites across King County. They're all kind of nestled around the Puget Sound region, but we've got them all the way up from Shoreline down to Enumclaw and Federal Way. And so hopefully one of those sites will be close enough for you to come to. If it's not convenient, then we have virtual tax site. So you are welcome to see us virtually. Either way, you can visit our website for information about our sites and for our virtual tax site, and we are happy to assist you. Uh, what do you need? Please bring the Social Security cards and or ITINs for everyone on the return. That means you, your spouse if you're married, and your children if you have any. You'll also need photo ID. If you're coming to a physical tax site, then you'll need your physical photo ID card, that typically like a driver's license or Washington State ID. Social Security cards can be pictures, ITINs can be pictures, but the photo ID needs to be physical if you're at an in-person site. If you're going to the virtual site, then obviously it'll all be digital, but you'll just need to be taking a picture of your ID next to your face. That way we know that you have it. We'll also need all of your tax documents, and if you're interested in direct deposit, then please have your account and routing numbers for your bank. And same is true if you owe anything, then we can pay directly from our tax preparation software. So if you provide your account and routing numbers, we can pay directly. If you don't want to file with us, no worries. Here's a couple of suggestions for you. There is myfreetaxes.org. This is run in conjunction with United Way Worldwide and is free for most tax situations. And then IRS Direct File is another good option. I just used it to file my taxes this weekend, and it can't support every single tax situation, but it can support most tax situations. And it actually was really convenient this year because it pulled my W-2 for me, and I did not have to actually do that much. So that was pretty cool. Cool. Well, any questions about that?
No questions that I can think of for this section.
Okay. Well, that wraps me up. So, um,
Great. I do want to add for those that happen to watch this recording that if anyone has questions regarding the Wage Boost pilot itself, program awareness or understanding, questions about the application or the enrollment, please contact the Imagine Institute. Our phone number is 206-492-5249, or you can email us at bskwageboost@imaginewa.org. You're able to call in and get one-on-one sessions by Zoom or by phone or in person if needed, and you can always visit our landing page at bskwageboost.imaginewa.org. Thank you so much, Casey, for all the information that you've given us.
no problem.
If
Happy to
anyone,
help.
if anyone has any tax questions and has any individualized questions regarding their returns, we will refer them to your website and yeah, and hopefully that, we can help them find the resources that they need to be able to file their taxes.
Yeah, we don't answer specific tax questions specific to your situation, but if you ever want to just reach out to United Way to ask some more general questions, you can email me at freetax@uwkc.org, and that inbox is monitored by me Monday through Friday, so I'll see it and I'll give you a reply back.
Great. Thank you so much.
No problem.